America is home to 33 million small businesses, the beating heart of communities across the country.
And proof that the American dream is still alive.
This is a show about those dreamers and doers and the communities they serve.
Their real life stories.
Their struggles and successes.
Their grit, determination, and passion.
And the people who fight
to keep their American dream alive.
I'm Alfredo Ortiz.
I'm Elaine Parker.
And it's time for another episode of Main Street Matters,
America's small business megaphone.
Hi, everybody, and welcome to another episode of Main Street Matters, America's small business megaphone. I'm Elaine Parker with the Job Creators Network, and today we are joined by our good friend, John Carney. John is the economics and finance editor at Breitbart, and of course, the author of my favorite digest, the Breitbart Business Digest. If you don't subscribe to it, you need to. John, welcome to the show.
Yeah, thanks for having me.
Well, there's no shortage of economic numbers to talk about. And as an economics nerd that I am, I was very excited to invite you on and talk about something really fun like CPI. Kind of not.
Yeah, it wasn't as fun as it had been. We got some really high numbers for CPI. And the producer price index also came in very, very high. It is, and even more troubling, it's starting to spread, meaning we knew the price of oil was up. We knew the price of gasoline was up. We're starting to see that seep into other prices in the economy, particularly in the producer price index. You can see things like the cost of shipping goods. So trucking services are up something like 8.7% in a month. In CPI, we saw airline prices going way up. So a month ago, I could have told you, okay, yeah, the inflation numbers came in hot, but it's all energy. This month, it wasn't all energy. It was definitely energy plus the other stuff that energy, most directly affects. And that's troubling too, because it's probably, as long as the oil prices stay high and gas prices stay high, we're probably going to see that leakage of price pressure into more and more parts of the economy.
Well, I just don't, there's no way to stop it,
Right.
because energy affects everything. And you and I talked about this a lot during the Biden administration when energy was very high and people were paying even more, $5 a gallon at one point, was the national average. Today, the national average is $4.51. That's tough on American families, but I'm going to use a word that I hated under the Biden administration because it wasn't true, and that's transitory. Tell me how transitory fits into this narrative right now.
So there's actually two ways that this could be transitory. One is a good way and one's a bad way. The good way is, look, we get the Strait of Hormuz open, the global price of oil comes down, the gasoline prices will come down pretty quickly after that, not immediately. There's an old saying that gas prices rise like a rocket and fall like a feather. They tend not to come down as quickly as they went up. That annoys everybody. But that's partly just out of that's the way competition in the gas market works, is that gas stations try to keep their price up as long as they can. And then, the guy across the street lowers his price, so you lower your price. That's so eventually it'll come down. The bad way is something that also didn't happen under Biden, is that people run out of money. Look, if gas prices go up to $5 a gallon, we are going to start to see some serious demand destruction in other parts of the economy. I think we can see that actually a little in these recent reports, which worries me.
Explain demand destruction.
Sure. Basically, so every dollar you put into your gas tank is a dollar less you have to spend at a restaurant, at a hair salon, at wherever else you might be spending money. becomes much harder to make those purchases, whether it's services, goods. If you look at like the appliance prices in the CPI number, they didn't go up a lot. And one of the reasons I think they're not going up is that businesses are facing pricing pressure because they might want to raise prices. Maybe their costs of shipping goods went up, but they're having trouble pushing through some of those costs because their customers are strapped because they're putting so much money into their gas tank. And that is a real concern. The reason why that didn't happen under Biden and why inflation was so widespread and why it was able to get so high is that the government was pumping in a lot of money through deficit spending, and the Fed had interest rates pinned near zero. So right now we don't have either of those things. The Fed is somewhat restrictive in the stance of monetary policy. That doesn't look like they're going to cut anytime soon. The government deficit spending has actually come down, so we're no longer flooding the economy with debt. So I think there's a limit on how bad inflation can get, but that limit is not good news. It's not comfortable. Hopefully, we get the good way out of this, which is the Strait of Hormuz opens up. But the bad way out of the rising prices is that people run out of money to spend on things besides filling up their gas tank.
You wrote in the Breitbart Digest that the middle of the inflation distribution moved higher. What does that mean for a Main Street small business owner?
Yeah, so inflation can get the index covers hundreds and hundreds of things, thousands of things really, and so sometimes it gets moved around a lot by things that by large items that move up in price. So gasoline can push the index around a lot. When you're looking to see like what's the underlying trend, it's helpful to look at things like there's a calculation called trimmed mean, where they basically take the biggest movers and on either side, the things that go down in price a lot and the things that go up, exclude those. The median actually is also another way of doing this, which is you just take the average of the exact middle of things that moved in price. And the median CPI, and I tend to look at that because I think it's helpful unlike the core prices, which exclude food and energy, I don't like to do that because those matter a lot to people. So I'd like to look at median. And when that starts to rise, that's telling you that it's not being pushed around by, this or that price, but that prices in general are rising. And the median went up a lot it doubled basically. It had been going up 0.2%. It went up 0.4%. That might not sound like that much, but if you calculate that out over a year, 0.4% every month gives us a really high inflation number if it lasts at that level for the rest of the year. Hopefully that doesn't happen, but it's hard to, I would have told you a month ago that I would have thought, we would have gotten the oil situation figured out, and we don't.
Well, I know the president rejected Iran's, on Monday, I read he rejected their offer. You've kind of described the gas prices the way I view weight. You can gain weight at a very, very fast clip. And then when you decide to lose weight, it is, it's turtle speed in terms of losing weight. So let's pretend in a unicorn world that the conflict ends, the Strait of Hormuz opens, oil starts moving. Are we talking 3 months, 6 months?
Yeah, I think we're talking quite a while. Oil is up above $100 right now. The futures prices don't have it moving down below $90 for quite some time. And we were down near $61 a barrel, at the beginning of the year. We were down, $3 something on gasoline. So I don't think the price of oil is going to drop right away. There's going to be a lot of pent up demand for the oil that gets released. There's so much oil stuck on tankers and in refineries in and around the Persian Gulf that they can't dramatically increase the amount of oil out there because, they've got to empty those tankers first and then get them back there and refill them. So it's going to take a little while for the price of oil to come down. And then I think it'll take probably a couple, 2 or 3 months on top of that to get the price of gasoline to start coming down. So this summer, people talk about summer driving season. People drive a lot more in the summer. That's going to be a tough time for a lot of consumers, which means, frankly, bad news for a lot of businesses that depend on people who would, be driving their families to, whether it's on a vacation or, flying their families somewhere. I looked just this morning at an index I hadn't looked at for a while, the TSA travel index, which is basically how many people go through TSA checkpoints. This became, I followed it really closely during COVID because it was a sign of are people getting out and flying again? We're down year over year in airline travel. That's probably going to get worse as fuel prices continue to rise. And the number of flights out there is actually declining. We had Spirit Airlines collapse. And so that is going to hurt both prices, at least in the short term, and also the volume of planes that are out there flying. So I really think it's going to be a rough summer for a lot of American families and businesses.
Yeah, my brother used to be able to get his whole family, 2 kids and his wife, on Spirit Airlines from Atlanta to Houston to visit our father, round trip, $250.
Wow.
Not each, not each, total $250. Now they all carried a backpack because there's no luggage at all.
Right.
That's no checked fees or anything like that. So they carried their backpacks. But I don't know.
I don't even think I can park at the air, at LaGuardia or JFK for that much. So that's an amazing deal. And that is the airlines are going to, and they already they've started to pass on the price of higher fuel costs. And again, there will be a limit on that. And the same thing with the demand destruction will work pretty directly, actually, with driving and flying. People at a certain price point, people cut back. They can't cut back that much on driving. A lot of people have to drive to work. It's relatively inelastic. But you will see people start to cut back on discretionary driving, so vacations, weekend trips. And they'll cut back on on booking things, whether it's on a bus or a plane, because it's just so much more expensive.
Yeah, the airline tickets are definitely up in price for sure. Talk about the jobs picture, because we had this great number in January. I think there was no way around just saying absolutely horrible number in February. March is a good number, and April's a really good number. Both blew away expectations. Talk about the jobs number there.
Yeah, so one of the things that's going on in America right now is we haven't seen people have talked about the economy being a low fire, low hire economy, but that's wrong. We are not in a low hiring environment at all. Actually, as a lot of businesses will tell you, they are hiring everybody they could get their hands on. There is a lot of demand for labor. We've seen it, as you said, in January, really good, February, miserable. March and April were very good, strong months for hiring. If anything, we're likely to see much lower numbers because the supply of labor isn't growing very fast. We have an aging population, so a lot of people are actually retiring out of the workforce. Joe Biden had been flooding the economy with illegal aliens, and that was supplying a lot of labor force growth. Not, by the way, not great labor, not the labor that a lot of businesses were looking for, but it was growing the labor force. We're not doing that now. It's probably right now, we need to average 10,000 jobs a month, maybe as few as zero, to basically keep the unemployment rate from rising. Unemployment rate is ultra low, 4.3%. The weekly jobless claims have been coming in super low. I did the math on it the other day. We're in the best, it's only been lower around 4% of the time going all the way back to 1967. So in other words, the jobless claims it's very, very few people are being laid off, and we've seen very good hiring numbers. So that's a strength in the economy. I am a little worried about whether that will continue because of the possibility, as I was saying, of demand destruction. If people are buying less stuff, companies will start making less stuff. And if you're making less stuff, you need fewer people. So I am worried that there's a risk to the labor market right now from the high prices. This is a particular kind of sort of stagflationary risk that's not like the inflation we had under Biden, where that was being fueled by excess money, government spending, and the Federal Reserve policy. This is a supply shock that's pushing up the price, a particular price. It's starting to spread to the rest of the economy, but it is not. It will eventually drag on spending outside of that sector. By the way, I do have some good news. In the PPI report, the energy exports. We're a big energy exporter now. Energy exports. The price of the exports of the energy that we export is up 50% year over year. It went up 16% in April. It went up like 17 or 18% in March. So so we are actually making that part of the economy is actually doing really, really well. And eventually that should start to filter through into hiring and more income. That money will get dividended out to the investors in those companies, and that will help the economy grow. But there's going to be a gap. So the money goes into we're making money from selling and particularly exporting energy. And that'll take 6 months, a year to get recycled back through the economy. So again, that sets us up for a pretty rough summer into the fall. If I were a Republican running for re-election in the midterm elections, I'd be worried.
So you mentioned 4.3% unemployment. By a lot of measures, that's full employment.
Right.
But how's AI playing into this scenario? Because we've got, I think the quits rate was up in the JOLTS report. We've got immigration under control, so we're not flooding the market with illegal immigrant workers. But AI's in there, just continuing to grow and make its mark. How do you think AI is working into this scenario?
So right now, it's very hard to see AI costing a lot of jobs at the moment. It seems to mostly be sort of like Greek tragedy, like killing its creators. That the layoffs we've seen are in tech. So it is the tech industry that is being killed by its own tech. It's actually probably right now a net job creator. We've seen job growth in construction. These data centers need to be built. That takes jobs. Those won't last forever. That's not, a lifetime of work building data centers, but they're going to last a while. I mean, the demand to build these data centers is quite high. So they're not, that's not going to end right away. So right now, I think AI is probably net providing jobs. Longer term, will it cost jobs? Yeah, I think it will cost jobs, but I'm not actually that worried. I'm pretty bullish on, first of all, I just don't believe humans will ever run out of work to do. That even if we get some jobs that get displaced by AI, we will find new work, better work that needs to be done. I think about when my father was working for a law firm when I was a small child. They had a huge secretarial pool, entire floors of typists. The advent of computers wiped that out. But it's not like we have young women who there's only staffed by young women at the time. Young women not able to find work. In fact, they found better and higher paying jobs than what they had been in. So I'm not worried about, the scenario of like, everybody will have to be on welfare because nobody will have work because AI will do all our jobs. That's not really going to happen. But the mix of what jobs exist, I think, will shift. I noticed just in my own life, there's things that used to take me longer to do, even just, running numbers about the economy that I can do in minutes rather than hours now that I can use AI. You have to double check it. Sometimes it gets the math wrong, which is super annoying. But this, I don't have an assistant to help me do Breitbart Business Digest, but if I did, I'd probably fire the person because I can do a lot of the work that I wish I had an assistant for with AI.
So interestingly, you say that about AI. It is wrong sometimes. I had an argument with ChatGPT the other day. It literally was an argument because I was asking what some of the different property exemptions were. Besides homestead, I was curious how property exemptions played into property taxes. 'Cause everything going on in Florida with the governor in trying to eliminate property taxes, but the school taxes will remain. He's focused on the city and the county taxes, right? And so I wanted to know how some of those exemptions, widower and widow and, people who are blind or disabled, those types of non-veteran or veterans who are partially disabled. And someone who is blind gets a $5,000 property tax deduction in Florida. And somebody who is a widow or a widower gets the same deduction. And ChatGPT said it was 500. And I said, and I had actually just read it. So I said, you are wrong. And it went back and came back and said, no, it's $500. I said, it is not. It is $5,000. They are the same deduction. And finally, we went back and forth a little bit, came back and said, you're right. I was wrong. And it is $5,000. So I found that interesting how you cannot just walk away from ChatGPT as your only source and think that it is right on everything, which to me says, hey, we're still going to need humans. They're not going to totally take us over.
No, you're right. First of all, I love that you argue with with ChatGPT. My friends talk about this too. I do it. It's kind of fun to debate it, and particularly when you're right. The thing that worries me is, you can do that and I can do it with things I know about. And a lot of people will say, well, it got the thing I know about wrong, but then rely on it for things they don't know that much about. And I think, wait, no, it's wrong on the things that you know. So don't just take its word on one of the most annoying things you see these days is on Twitter, X, people always say like, Brock, is this true? And I think, why are you asking that? The machine doesn't know better. And it's particularly challenging. It can get a lot of conventional wisdom stuff right, if the conventional wisdom is right. But if the sort of mainstream take on things is wrong, it's almost guaranteed that the chatbots will be wrong too. So you really do have to check these things over and over again. Like I said, that can be annoying, but but it's probably good news for the humans because we're not yet redundant.
Well, yeah, another argument that we had with it was the spending of a taxpayer dollar. Is it better for the economy through welfare payment or through, just from an economic standpoint, for welfare payment or through a defense dollar spent? And ChatGPT took the side of the welfare spending of a dollar. It was very much a Democratic argument that I've heard many politicians give on why that's good for the economy. And ultimately,
very demand side, I guess it was saying, oh, well, those people will shop or whatever.
Yes.
Yeah, okay.
It was a very, very long conversation / argument. but finally got ChatGPT to turn a corner and see the capitalistic side of things. So is interesting, but that's a really long, in-depth argument that you really had to know a lot about economics to win that.
Yeah, I think I wonder if some of us, it sounds like you're doing it too, kind of enjoy this. I like debating the AI bots, and so I may be consuming less other media. I wonder, am I watching less television now because I'm having so much fun? Because you watch television and they get something wrong, you can yell at the TV, I guess, but the TV doesn't answer you back. When ChatGPT or Claude or Grok gets something wrong, you can actually talk back to it, and that's both entertaining, I think, and it's probably a better way of to put it one way. I'd prefer to get my misinformation with something that I can eventually correct than to have to get it from the television, which just goes on with it never correcting itself.
You know what else, though, is you don't get defensive. Chat GPT or Grok does not get defensive at all. There's no fight. There's no breakdown in a relationship. There's no apology. You know how many friends I've lost at this point over my supply side economic views? Tons. I don't fight with my family because they all are kind of on the same side of things as I am, but I've had enough friends that just don't want to talk to me about it anymore because we don't agree. I can always go back to ChatGPT and Chat will have the same conversation over with me, let me fight with it, and I can win, and it'll still talk to me the next day.
Right. It's not mad at you. Who knows? Maybe it'll help us all get along better with some of the people who disagree with us, because we're like, okay, I'm just going to have this fight with ChatGPT instead of, the friends who I'm hanging out with. They don't, it doesn't get, its feelings aren't hurt. You come back even just moments later and it's ready to go.
Well, maybe it'll teach us how to talk to each other without just being so personally attacking. I guess that's the point I'm trying to make, is not that my new friend is ChatGPT, but that is that it is leading the way on how to have a conversation of disagreement without ending your relationship, whatever it is, friendship or whatever.
Right, how to be proved wrong in a civil way. I actually, this is way off topic, but I actually have to tell people sometimes that it's okay to argue with me. When that somebody else, I can see them sort of making a face after I've said something, and I'm like, I'm very good. I do not get offended if you have a counter argument. I will warn you that I've probably thought of your counter argument and I probably will be able to answer it, but if you have, if you think I'm getting something wrong, go ahead. And I do. Some of my neighbors out here in rural Connecticut, where I live, actually now sometimes we went over to dinner at another couple's house, and it was about 20 minutes into it, and the husband turns to his wife and says, "Okay, honey, I did it. I made it 20 minutes. Can I argue with John now?" Apparently they had an agreement that he wouldn't start it right away. And I was like, I'm okay with this. I like this. She's like, I know, but once you guys get going, sometimes it just doesn't stop. So I wanted to have, find out how the kids were doing and all of that sort of thing before we, get into arguing about tax policy.
Which is great for dinner conversation always.
Yeah, us econ nerds, sometimes I guess we probably do sometimes ruin parties.
Yeah. I'm not an economist, but I am a nerd in that area, and I do follow probably more than the average person does. But I always have, probably what seems like very basic questions that I ask, or, there is no stupid question, but I see them sometimes when I'm asking an economist, is this a stupid question? So let's talk about the Fed. We will not, it's not that we won't see Jerome Powell because he's not leaving. But he's not going to be the main guy talking anymore. Kevin Warsh. So there's a lot of things going against him in terms of lowering interest rates. And I mean, a lot of us, me included, we're looking forward to rate cuts, and here we are.
Yeah, we're not going to get any rate cuts anytime soon. These last couple inflation reports really, 1 month could look through it, 2 months can't. It's not the May inflation report when we get through this month is not going to be much better. I mean, you just look at the price of gasoline; it's still going up. The spread of inflation, the breadth of it is probably going to increase. So, that's 3 months. That's a quarter of the year of having elevated inflation. And inflation, frankly, was elevated before that. So we are not going to get cut soon. Kevin Warsh is not even going to push for them. He has to, the Fed is not the presidency. It's not a sole proprietorship. It's a committee. And he has to bring along the committee. So the silver lining on this is there's lots of other things that need to be done at the Fed, a lot of institutional reforms that need to happen that he can get working on right away. But the interest rates will probably have to wait until at least the very end of the year, maybe next year. The Fed is going to want to make sure that once inflation slows down, that it keeps going down. So it's not, it won't be, like I said, 1 month. A good rule in economics is don't make a big deal out of 1 month's data. And, even though we all do anyway, right? Like the month, something comes up and we say, oh, job boom, job crash. But it's better, you'll want to see a couple months of milder inflation and inflation coming down, no longer increasing. And just do the math, right? We're already in May. So if the May number comes out, rough, which I think it will, so then you have, let's say you get benign inflation in June, July, August. So earliest the Fed could even think about really cutting would be September. Then there's 2 more meetings in the year after that. There's they only will meet 3 times at the end of the year. I think it's going to be hard for Kevin Warsh to convince the FOMC to cut in those months. I think we're really, especially with Jerome Powell still there, frankly. He says he's not going to try to be an obstructionist, but I don't think they're going to cut. So I think we're really looking at next year, which is unfortunate.
So why was it, and this is not to be political, but why was it okay for Jerome Powell to cut in the months leading up to the election, the general election in 24, when inflation was actually higher than it is now? But it doesn't look good now. And I understand the economic factors going against it for now, but does that bring us back to it was political, or was it something else? I mean,
I think it was. I mean, I think that it was a terrible, terrible idea. If it wasn't political, it looks awfully political, and they shouldn't have done it. They should have waited. So there was some what looked like could be the beginning of weakness in the labor market, and and they were trying to respond to that. But frankly, they should have waited till after the election. Going before the election basically was communicating to the public that the inflation problem was largely over, and it wasn't. And the Fed had to stop cutting, and they didn't cut again until almost a year later. So that I think was that they shouldn't have done that. And I should caveat what I said about not getting interest rate cuts this year. I don't think we'll get a hike. And the only potential for getting a cut is related to what I was talking about in the beginning, which is if we start to see serious demand destruction rip through the economy, and because of the high price of gasoline, then we may start to see layoffs, and the Fed may have to respond to that. So in other words, you and I were looking forward to a good cut, right? A cut that was because we had non-inflationary growth. Yes, the labor market was going to be strong and the economy was going to be growing, but inflation would come down enough that we could actually lower interest rates. I think now if we get a cut, it won't be a good cut. It'll be a cut for a bad reason because the Fed fears weakness. I don't see that yet, but I do think it's a possibility. It's sort of looming out there.
Yeah, I'm watching the housing market too, and obviously mortgage rates are a big issue. It's just housing market just seems to have come to a standstill is a strong word still, but I don't know. I mean, in Florida, housing had gotten so out of control. There's a little bit of, and I say this as a homeowner too, so there's a little bit of like, oh, well, good. People can actually negotiate on home prices now. I'm not trying to sell my house, so obviously I can look at it from that point of view and think this is great. But I have a daughter coming up who's going to ultimately want to buy a house when her and her boyfriend get engaged and all that stuff. So from that standpoint, I like that there's a little bit of breathing room for first-time buyers to kind of look at housing, but the mortgage rates are just so high.
Yeah, and I think right now there's a lot of, I would call, pent up, not demand, but supply, in that a lot of people who would sell their house will not because they have a 3%, 4% mortgage, and one of the things people sort of don't think about when they're talking about home prices is almost everybody who's selling a home is also buying a home. So you're in the market in both ways. So when people are like, oh, I'm happy that home prices are going up, they're often forgetting that means if they sell their house, they're going to have to pay more for the next house. You sort of want to be lucky. You want your home price to go up, and you don't want the homes that you want to buy to go up. So mortgage rates right now, usually when mortgage rates lower, it actually doesn't help affordability that much because very often that creates more demand and home prices go up. I think actually it will work differently when mortgage rates seriously come down because I think a lot of the people who won't sell now will sell if they're not getting, if there doesn't mean that they're paying 40% more for their next mortgage. So if you have you're probably not going to get a 3% mortgage again unless we have serious, economic problems. But if you can go from a 3 to a 4, 5, or maybe you sell. And so I think we will actually see more homes for sale when mortgage rates drop. And so we won't just get an increase in demand from the cheaper mortgages, but also an increase in supply. That would be great for everybody. I thought we were going to probably see that later this year. Now, at best, it's probably not till next year.
That timing would work out okay. What I'm seeing and why I'm pleasantly, moderately happy about is the people who had not updated their homes in 25 years were able to demand the same price as the people that had updated their homes. Right. When they go on the market, they'd be valued the same. And I thought, you have a kitchen from 1984 and you're selling it at the same price as the guy who just spent 50 grand on his kitchen. And it was super annoying. So you are seeing people able to deal, and that's the kind of house obviously my kids are going to be bidding on. Is a house
your numbers in home price increases back that up too. Home prices were rising very rapidly for a number of years, and that isn't happening now. We're back down to a much more moderate price increase for homes, which is much healthier for everybody. And as you said, it actually can encourage people. When you have this sort of like market on fire that people just are, there's a bid for every house and multiple bids as soon as homes go on the market. Then the incentive to do things like, fix up your home to get it ready for sale or just to fix it up at all. You say, well, why do that? I can just sell it now. That goes away. The and so I think you're right. We're getting to a more rational housing market, and I think we'll get even further along that if we finally bring down the mortgage rates. Look, I talked to some people quite a few years older than me, and they think we're big babies about this. They're like, you guys are whining about your 6.5%, 6.7% mortgages. When I was a kid, we had 18% mortgages. You know, that they are, look, times change. We have had much lower mortgages in the recent past. And so again, if you have a mortgage that's 3.5%, it is very hard for you to accept I've done the math on this a number of times. If you have a $500,000 house with a 3% mortgage, and you sell to move a smaller home, maybe your kids grew up, they moved out, you don't need that much home. You sell hoping to save money, right? You say, I'm going to bring down my monthly mortgage cost. So you're going to buy a $300,000 home. Well, you might not be able to bring down your mortgage costs because you're going to get a 7% mortgage. So that takes away the incentive for a lot of people to sell. It's not just like they don't want to pay. Their incentive for trading out of their big home into a smaller one, that creates a problem for the younger family that wants to trade out of their smaller home into the bigger one. We get this sort of traffic jam in housing, and that's what we've had for a couple of years. I think it's getting a little bit of relief, but still the existing home sales volume is very low compared to where it would be historically.
You're right, though. It is expectations in terms of us being babies, because I bought my first house in 1999 or 2000, and mortgage rates were coming down, and we were so excited to get 7%. Excited.
Right.
I mean, if you had a 7% or a 6.75%, it was like, ooh, you got a great rate. I mean, wow, you're at 7%. And now people are like, oh my God, I can't afford to buy a house because rates are at 7%.
Yeah, it's extraordinary. I didn't, just personal note, I guess. I never owned a home till the pandemic housing panic, basically. And mortgage rates literally got so low that it lured me into being a homeowner. I mean, I live in a great place now. I'm not upset about this, but it brought me into home ownership because at a certain rate, it no longer. I lived in New York City. I rented. I thought I didn't really have a lot of ambition to buy for a long time, but I did.
Owning became cheaper than renting, right? Owning became cheaper than renting. Yeah,
that's right.
I've heard your story a lot. I've heard that story a lot from people.
Yeah, I was able to move out of a pretty small apartment. I was 4-story walk up in Brooklyn into a much larger house and pay less on my mortgage than I did on my rent. I don't think those times are going to come back. I'm sorry to the younger people out there. We're not going to get that. But I do think we'll get to a place where mortgages are not going to be, they'll be closer to 5% than to 7%.
I bought my house in 2018, and I don't know why I remember the rate, but it was 5 3/8, I believe. And I was sad about it. I was able to refinance down, but I thought that was so high. But yeah, I think that if we got into the 5s, that would be a fantastic area to balance out. And I think you're right. People wouldn't feel like, wow, I'm at 3.5 or 3.75, and letting this go for a 5% would kill me. It's not that bad if you're looking to make that change. So I think you're right. I think we could actually motivate supply and demand at the same time, which would be the best of both worlds for people like my kids who are going to be in the market for a home in the next 1 to 2 years.
Yeah, I think that's right. That's a very rare occurrence. We're living through the end of the bad side of the logjam in housing. where, there was a lot of demand and supply dried up once interest rates started to go up. I think we're going to see it go very uniquely. Again, doesn't happen a lot in history, but where you lower the interest rate and it motivates a lot of people to sell their homes. And I think that will be good. I think it probably motivate a lot of people to become home buyers as well, because they'll say, all right, I'm no longer, a lot of people find it very intimidating when they go to buy a home and they feel like they got to buy that day, right? They put a bid on it, today, or else, this thing's going to go. That kind of manic market scares a lot of people. It would scare me. I don't want to, biggest financial decision you may make in your entire life, you're being asked to make it in a couple hours. I think once you get a more rational market that moves at a more traditional pace, that will actually help people feel better about the economy, about housing, and about actually going and buying a home.
I actually saw an assumable mortgage. It was a VA loan, an assumable VA loan.
Oh, interesting. Yeah.
Of a house on the market. It was gone pretty quick, as you might imagine. But I've never, ever, ever seen one of those in my life, and it was assumable. So I assume that they're having trouble moving the house in the market. And so to put it out there like that really sweetened the deal to pick up a VA.
I know some people who have rented their homes instead of selling. And that's sort of like another possibility, because they did not. So they became both landlords and tenants at the same time, because they rented out their home because they didn't want to sell it, and they rented the home that they were moving into because they also didn't want to get a 5% mortgage, or 7% mortgage, and so. They neighbors of mine up in the Northeast, and they were moving down to South Carolina, and they became both a landlord up here and a tenant down there. One way, people will get creative at points to try to deal with the confusing housing market.
Yeah, actually, I could see doing that in that situation. Well, John, I think I could talk to you for hours about all of this economic data. I think I've gotten my economic fix for the week. But I want to thank you so much for taking the time to join us on Main Street Matters, America's small business megaphone. And thank you all for taking the time to tune in. Main Street Matters is part of the Salem Podcast Network. New episodes drop every Wednesday and Friday. You can subscribe to the show wherever you get your podcasts from, and we'll be back soon with another episode. Bye for now.